Anthony, focus on the employment part of it, because that's going to be the real puzzle then. What is leading the strength in the employment within the ISM?
Well, we are coming back from a month of contraction, and we've seen the growth here. As was mentioned, it's 51.5 up from the 49.1. And there's been hiring in the retail industry, as well as we have a couple things going on here. We have a combination of some companies looking to hire and not being able to backfill positions because of the lack of availability of suitable workers for those type of open positions. Most notably, we see that in the customer-facing industries like retail, accommodation and food services, restaurant workers. Still a tough time for them in backfilling their open positions.
Anthony, good morning. It's Guy. Talk me through the inflationary read from this data. You've got the prices paid number. Alex has already referenced the employment index. Talk me through what the signal I should be taking away from the data.
Great question. I think that when we look at the variables that comprise us moving into a recessionary period, we still have strength in the employment numbers. We know that from not only this report, but the non-farm payrolls report that came out on Friday, as well as we see growth. This represents over 80% contribution to GDP, these 18 industries that comprise this sector. The one variable that we are looking at now is the inflation piece, and prices are still very high. As it came down just 0.7 percentage points, most of that was driven by the reduction of fuel prices, but overall, we're still seeing high commodity prices. And until we see that easing, it's not going to be anytime soon that we see the prices come down a bit.
Yeah, Anthony, you mentioned retail, though, being strong for employment, which then obviously impacts wages. But the retail industry and the jobs report on Friday saw a loss of about 30,000 jobs, and department stores are also losing jobs. Do these two data points match up, or is there something seasonality-wise going on here?
We do measure this, and we do apply seasonality to this as well, especially at this time of year with the holiday season. But overall, we're measuring directional change month over month. So we could have an increase like we did in this report. It doesn't mean that when we look at it 6 months back or a year over year that there's been growth in that particular area.
Anthony, what is the signal do you think the Federal Reserve should take from the data you just produced?
I think they'll continue to raise interest rates, but they won't be as the high levels that we've seen in the past. I think that they're just trying to stave off inflation, and that they will continue to increase the basis points on the interest rates, but hopefully not with the jumps that we've seen in the past.